Great. So now that we understand better how to manage APIs through the life cycle, we want to switch to one of the key benefits of APIs, and that is building partnerships. And I'm very pleased to be able to welcome Arvid Swartsenburg, the head of partnerships and strategy at Youll Be Tomorrow. Arvid, welcome. We had a couple of great keynotes talking about open finance in Southeast Asia, and Youll Be Tomorrow is deep into that, and particularly with your role in partnerships. So we're looking forward to learning more about how you grow the partnerships across the region.
Yeah, certainly, John, and good to see you again, and thanks everyone for joining. So I'll share a little bit about myself first. So essentially, about 2 decades of experience in financial services as a practitioner and a consultant. So spanning across the US, Europe, Africa, and then finally here in Asia. I've been with Youll Be for about 2 years now with the digital bank. I started with Citi for about 10 years, and then I was in consulting for about a decade as well, looking at digital transformation strategy and investment banking. So it's been quite a journey. Today I'm going to share a little bit about Youll Be Tomorrow and how we grow ecosystem partners, particularly using some of these APIs. It'll be less focused on the APIs and the technical side of it, more about the commercial use cases on how we use internal and external APIs to enable some of these capabilities that we have. So to give you a flavor of that. But I think before I get into it, let me give a quick background of the wider marketplace. If we can go to the next slide, please. So there's obviously a lot happening, and I think there's more happening amidst COVID. So banks have been forced to accelerate their digital journeys. Youll Be as a bank itself, and I think Tomorrow as a digital bank was actually very well positioned, almost ahead of this curve to be able to bring this seamless and digital journey to our customers. And this customer adoption has accelerated as well. There's all ages and profiles have really been forced to adopt digital amidst the pandemic, making sure that when they're locked up, they can order food and things like that. So it's really proven to accelerate the whole marketplace in digital. If you combine that with the regulation, there's also increased regulation, I think, of progressive regulations where it comes to APIs, but even the digital bank licenses across Asia being offered, that I think that's accelerating now and really showing some good progress to where this adoption can be further standardized across the region and countries. Competition as well, fintech, big tech, banks, non-banks, I think they're all competing. I think it's healthy. This is the age very much of collaboration and not competition, but seeing how we can collaborate, obviously with using some of these API rails to expose and consume some of these capabilities is really at the heart of the matter, so that we can get almost a standardized approach and we limit some of the investments and hardwiring that needs to be done in order to kickstart or activate those partnerships. So I think competition is very healthy and it's welcomed. And it's also actually driving great use cases ultimately for the customer, which is what this is all about. Lastly, payments. I think this is one of the big friction points and a big area where banks and non-banks and some of the new digital banks will play in order to drive conversion of customer adoption to a digital. A QR code, seamless payments, peer-to-peer payments. These are all big themes happening, and APIs are very much involved in terms of activating some of those capabilities. Next slide, please. So I work in the partnership and strategy team in Youll Be Digital Bank Tomorrow, and as part of this strategy side of things, we actively look across all digital banks globally. We track over 300 digital banks globally, really keeping our nose to the ground in terms of what's happening, what can we learn, up to what are the do's and don'ts. Obviously, there's been a mixed bag of success. I think although overall digital banks have been very successful to scale, there's literally millions of customers driven, I think, by curiosity, driven by sometimes superior use cases. In large, I think the digital banks are still providing a fairly focused value proposition. And what I mean by that is it's let's say a really good payment capabilities or lending, and they have some of these core competencies, but the breadth of the offering is not yet as wide as some of the banks can offer. And I think that will and should change in time. To what we found, there's essentially 4 key success factors to the few that actually have been profitable. And we've seen an extension of the path to profitability for some of these digital banks beyond 5 or 10 years now, where they just need a little bit longer to really activate some of the commercial use cases for them to be successful. So these four key success factors for digital bank include the one, targeting large markets with inefficiencies. We've seen that, for example, in like Africa with M-Pesa, even in China, obviously a huge market with pain points that if they get solved, there's big opportunities to scale through digital, having this cost-effective model. The second is lending. There's obviously margin compression is really forcing some of the banks to reinvent or diversify their revenue models. And unsecured lending is at the heart of any success of any digital bank, especially where using alternative data in order to extend reach to the underserved, sometimes unbanked populations of some of these emerging economies. So leveraging alternative data and doing unsecured lending is actually key, but they need to be able to work through some of the credit cycles to make sure that they can uphold their balance sheets and ultimate path to profitability. Third, ecosystem partnerships. So this network effect is key. Obviously, there's huge platforms with customer bases, and some of the digital banks have gotten an early start to leverage some of those customer bases, whether it's e-commerce or ride-hailing and so forth, and then really combine, let's say, telco, travel, and bank data together in order to provide a richer proposition for the customer. So those collaborations are actively happening, and I think over the next few years, we're going to see a lot of interesting use cases coming out that hopefully drive a lot of customer value and a healthy competition that can be replicated. And fourth, it's a lean business model. Running a bank is not cheap. Running a bank regionally is complicated. So whether you're talking about regulatory requirements, whether you're talking about technology builds, having this lean business model, we've obviously seen some of the digital banks adopting cloud in order to limit some of these costs, but to making sure this can be done in a sustainable way so that it's a scalable business is really critical to make sure that path to profitability can be accelerated and maintained. Next slide, please. So Youll Be, I don't think we need an introduction. Obviously, a large bank, well established, focused on capturing the trade flows across Asia. I think we're really well set up to scale. We are Singapore focused first and foremost, but progressively we're getting a wider reach across the region as well, where we're now with the acquisition of Citi, where we stand to actually be much larger. We are still fairly focused. We're not a bank that looks into the unbanked segments necessarily, unlike some of the digital banks. We do operate at a slightly higher target segment and providing a slightly different the value proposition. But it's interesting times as a leading ASEAN bank for us to now scale progressively faster and achieve some of our ambitions sooner. Next slide, please. So as a bit of background, in 2019, Youll Be decided to launch a digital bank. They did this really to extend beyond some of the limitations of their branches that they had in the region. The region is large. We don't have the branch footprint, or to create something like that would be hugely expensive. So we decided to build a digital bank focused on the digital generation and with the aim to become the world's most engaging bank as the key differentiator. The market opportunity is obviously huge in ASEAN, and we wanted to really build a digital bank that addresses some of the market inefficiencies around the banks being seen as not being simple, engaging, or transparent, and change some of those conceptions about banks through building a better tomorrow. Next slide, please. So 3 features which I'll just highlight, which we've started to roll out across our market that really drive home this differentiating feature. The first being the insight cards. This is really to enhance engagement with our customers. It's to provide a wider functionality and insights where it comes to personal financial management. There's obviously some big gaps across the region in terms of being financially literate, and this is one of our missions to take a look at. These things are essentially all enabled through internal APIs as well. We work with the data partners, Personetics and Maniga, that allow us to do data categorization, and these APIs allow us to serve some of these insights. As just an example, since inception, we've served about 150 million of these insights, and they all drive various usage and commercial benefits as well, such as extending this reach and then the number of clicks and then the number of conversions in terms of what we're trying to promote, whether it's a card usage or whether it's a deposit top up and things like that. The second is real-time expense tracking. Again, this is a personal financial management feature that allows in real time customers to see how they stack up. There's a lot of other adjacencies that we're looking at in order to further build this out, but it's at the heart of how we want people to be more transparent in their banking relationships, so that they have all the understanding and tools they need in order to operate. And last is the City of Tomorrow. This is a game we developed in order to encourage savings. It's a game where you progress across essentially 24 stages of life, where it starts in the Stone Age and it goes all the way to the Space Age. And as you deposit more, this city grows and evolves, and it's a very interactive game. It's a very engaging game to get people to pursue the right banking behaviors. Next slide, please. So we've done really well. Over the last 2 years, we've launched in Thailand and Indonesia. In Thailand in 2019, Indonesia in 2020. Since inception, we almost have 1 million customers that we've signed up. And actually, we've gotten some great validation from our customers as well. Our NPSs in Thailand, our NPS score, the Net Promoter Score in Thailand and Indonesia is a 40 and 50 respectively. It's pretty good in the context of banking. Anything above 60 is considered a world class, and it's a metric we follow very closely to make sure that the kind of capabilities and tools that we're developing actually hit the mark where it comes to the usage and the expectations of our customers. So we're actually very proud by that, and it's further, I think, validated by the wider industry that have given us a range of different awards about the best digital bank, the best digital bank for customer experience, and so forth. Next slide, please. So in 2021, we turned a new leaf actually, and Tomorrow was always launched for markets outside Singapore to really scale in those markets to target the younger digital generation, the YPF. But it dawned on us, especially amidst COVID, that now everyone's digital. Digital is not just a segment for the young anymore. So what we decided to do is actually combine the capabilities of our banking app called Mighty, which exists in Singapore, Malaysia, and Thailand, and combine that together with Tomorrow and the innovations of Tomorrow, the things we built around that into a one app strategy, and that's called Youll Be Tomorrow. That's been launched in Singapore as of Q4 last year, and we plan to rapidly extend and scale this across Asia as well over the next 18 to 24 months or so. It serves a much wider segment, so the YPF, the mass affluent. We do this through a dynamic interface. We stick with our theme of being simple, engaging, transparent. That experience should and will resonate across the entire spectrum of customers. And it's really driving lifetime value through this engagement strategy. So leveraging data and the connectivities we built in order to drive and engage the customers that drives that ultimate value for them. Next slide, please. So it's very much in a tech and defense strategy. In markets where we're well situated and penetrated, like Singapore, we defend. It's an omnichannel strategy, as we call it. It's both leveraging You'll Be Tomorrow app and the wider branch and relationship manager network in order to provide a holistic banking experience for a wide range of customers. In some of the more emerging markets, it's an attack strategy, really using a low-cost operational model to drive a new standard in banking through innovation and digital transformation. Next slide. So in a nutshell, I think we're pretty well positioned to drive scale and commercialization. We're really looking at scale as a number one. Globally, digital banks are valued based on their customer base. We want to obviously look beyond that and look at the commercialization angle as well, because we do have shareholders to satisfy, and I think this mentality is important for a bank that needs to actually make money. The three key pillars for us are, number one, strategic partnerships, and that's for us to accelerate growth through partners, to lower our cost of acquisition, actually drive some of these customer value propositions through ecosystems. Second is a lean business model, making sure that we can do things such as using chatbots to serve our customers and creating highly scalable processes that won't provide additional overhead. And then third, our customer value proposition, to drive the revenues. This is all predicated on engagement and data and working with partners to activate some of those use cases. Next slide, please. Okay, now on the right, we talk about the best collaboration creates something bigger than the sum of what each person can create on their own. When we take a look at strategic partnerships, we visualize it a triangle of value, essentially, where at the bottom 2 points are the partner and the bank that need to collaborate across some mutual objectives to make sure that they can collectively go to the market with something. But at the heart of this triangle, or at the top, is the customer, where we're trying to provide a value proposition that is rich enough for that customer to obtain value from it. So this collaboration is enabled through APIs. There's a number of these partnerships we've already put in place that are actually starting to really kick in and provide a lot of benefit to our customers. I'll show some examples of that later. But it's really about how we activate those partners from a technology perspective, a commercial perspective, data perspective, because some complexities come in when you mention all of these points that need to be looked at. Next slide. So evolution of financial services in a nutshell, we've gone from an age of digitization, where banks have started to digitize their processes and really embed digital in its core operating model, to digital banks being launched. Tomorrow is one of those objectives. To us, the next phase is really to take a look at embedded finance. So where we leverage partners not only for lead generation, but we really go and leverage them for product distribution, where we are the product manufacturers and we drive innovation of this ecosystem through this collaboration. So it's an area we're actively looking at right now in terms of how to bring all the pieces together. And it's something really exciting, because a lot of value can be created there in this part. Next slide, please. So the way we look at building these ecosystem partners are through embedding our products. So within some of these partnerships, so we have saving propositions, borrowing propositions, wealth propositions, lifestyle and loyalty, and then finally payments proposition. And across what we've built in Tomorrow, it's a lot of it is enabled through API. So whether you're talking about our onboarding journey, whether you're talking about our lending proposition, whether you're talking about loyalty, we have the various use cases that are governed through data. I think where partnerships becomes a little bit tricky sometimes is where we need to consume or expose our APIs across various partners. Large partners will typically assume that the APIs are standardized on their end, but it requires a work for us to align to those standards. On the flip time, sometimes we have them and the partners can't consume them. So having an aggregator in the middle is something really important, and that's something we're working with, where we actually have formed a JV with a company called Avatech.ai that becomes our middleman. And in the context of embedded finance, that middleman allows us to move fast, consume APIs, and work with partners in a way that allows us to leverage this data to create some of these new value propositions. So having that middle part to standardize some of those APIs for us to move faster is really important. Otherwise, it would take a long time for us to activate some of those capabilities. Next slide. So one case study I'd like to mention is Tomorrow Pay. Tomorrow Pay is an e-commerce loan that has been launched in Indonesia end of last year. It's essentially a buy now, pay later. We've launched this with our first partner, Beneca. There's about 4 or 5 in the pipeline to launch this further. As I mentioned, it's enabled through Avatech. We use data from the partner, transaction data, in order to enable transaction financing and actually consume some of the APIs through the partner and through our middle partner, in order to make sure we can adopt a different standard in credit underwriting and enrich the credit underwriting process, so that we can extend to a broader base of customers and actually use this to grow it. It's both an acquisition tool and it's also a lending tool for us. Next page, please. The second one I just want to mention is end of last year as well. We announced our partnership with Fave to combine the largest deals and loyalty platform in Singapore. Now, this is enabled through about 18 APIs that have been put together with Fave, where we try to drive a seamless journey for the customer. So whether it's on a points redemption or payments, these are all actually activated where there's a wide range of these different partners on this loyalty platform, where customers can seamlessly interact and engage on the app. Next page, please. No, I think just lastly, because I think we're running out of time. I think the imperatives for us when it takes a look at ecosystem partnerships are number one, to embrace the opportunity. This is about collaboration, not competition. There's a lot of interesting use cases out there. First and foremost, it needs to make commercial sense. Objectives need to be aligned, and some of the capabilities that need to be built need to be able to be activated in a commercially viable and scalable way. In order to grab these opportunities, I think moving fast is important, but yet being flexible and adaptive. Otherwise, some of these opportunities could go away very quickly, and other partners or banks could actually get ahead of the curve. It's obviously an ecosystem that's rapidly developing, and I think choices need to be made, and both sides, both partner and bank, need to be very clear about the direction they want to take in order to move forward. And then lastly, it's building for scale and customer needs. This comes back everything about APIs. APIs ultimately is the enabler for creating viable use cases for the customer, that combine the capabilities of both the partner and the bank in order to provide a richer journey for them. And it's largely about how to do these things. So we're very much on a path of progressively using more APIs, but doing this in a regulated and in a safe way, because there's obviously a lot of rules and governance that comes along with APIs. So doing this in a way that safeguards our customer data and safeguards the overall customer and the process, I think, is really important. But being able to scale this as well, so that you don't have to create new APIs and new capabilities for every partner, so that it's a very replicable model for the future success. Next slide, please. And I think that's it. So I'll welcome any questions if I have another couple of minutes left. Can't hear you, John. Sorry. Still can't hear you.
Sorry about that. I put myself on mute. Thanks very much, Arvid, for sharing that. And I guess what strikes me is partner ecosystems is one of your 4 key success factors for digital banking. So it's right up there. And you shared a couple of examples of partnerships, not just the customer facing partnerships, but also the technology provider partnership that you formed. Can you give me a bit of a picture for what sort of partners you look for as you try to scale across the region? Because in Singapore you're an incumbent, but across the region you're a challenger I guess that's starting to change, though, given you've acquired the retail customers from Citibank in several countries. But there's a lot of growth opportunity. So it's not like the mature market of Singapore. So how are you looking for partners to help you to reach these new customers?
Sure.
What is
Sure.
some of the
So
criteria?
I think, John, it all starts with the customer. So that if we can solve a pain point and we can solve that collectively, then I think it's a good start to a conversation with a partner. It needs to obviously be the right customer segment. We try not to go too wide because I think partners allow us, in a sense, to fish in the right pools. So it does allow us a gatekeeping for quality. So we do have some of those conversations, but typically a partner has reach. Ideally, the partner has reach across the region, where the use cases are replicable across the various markets, because we do very much take the regional look. Where that is not possible, we want to make sure we can replicate use cases, so not build one-off capabilities that are only applicable for that partner. They need to be reached across numerous partners. The common denominator, I think, is data. So typically, whether it's e-commerce or telco, these are e-commerce, telco, travel. I think these are three industries where we look quite closely, because there is rich data and data we can use for a number of things, whether it's KYC or underwriting and so forth. So I think that to us is very useful to get data. And then ultimately the customer needs to have the right mindset as well. Like I mentioned before, the objectives need to be aligned. Their capabilities need to be aligned. We've partnered with organizations before that, frankly, they weren't ready to partner from a capabilities perspective, from a technology perspective. The learning curve was too high. The teams were not geared towards digital yet. So although you can be an organization that's fully ready, if you partner with one that doesn't have those capabilities or that mindset, then I think discussions will go away pretty quickly. I think so. So the customer is one, the data is two. I think the mindsets is three, or the mindsets and the capability is three. That's really important.
That's great insights. Data, customers who are open to a relationship, and I guess that drives this sorts of partners that you're going to look for. And I guess also the partner readiness carries through, because there is always an education process when two companies decide to form a partnership, that you have to find out about them, they have to find out about you. But if they are, they need to be mature enough in terms of how they manage customers, and also how they manage their technology and operations, in order for it to start to have that fit. And I think you mentioned you're already partnering with some large-scale organizations that have their own set of APIs, and then there's a discussion about whose API do we use, what needs to happen to adapt the two organizations. So can you got any thoughts about how to make that less challenging?
Yeah, John, we do a lot of speed dating, so we don't want to be the people late to the party. So we do try to put our best foot forward and be very transparent in terms of what we want and whether there's collective value. It can be a one-way dialogue, where we don't want to be seen as the big bank regionally that wants to collaborate. It has to be a win-win for both sides, and ultimately for the customer, because if it's not for the customer, then there's no proposition at all. You can put up all the processes and APIs that you want. No one's going to use them because there's no value there.
Great. Thanks. That's a great point to close on. Thanks very much, Arvid, for sharing those insights with us.